Inflation, like a tempestuous force, has long been the harbinger of economic uncertainty. As the winds of disinflation blow across the economic landscape, hope flares anew for a September rate cut. Yet, amidst this flicker of optimism, a stalwart few, including Macquarie, stand resolute, refusing to yield to the tide of speculation. The recent consumer inflation report, while signaling a momentary reprieve, has not swayed their conviction. They hold fast to their forecast, seeing a rate cut as a distant possibility, not before 2025. The data paints a nuanced picture, revealing a slowing in the consumer price index growth to 0.3% in April, a rate below economists' projections. This deceleration, notably in services pricing, hints at a landscape where inflationary pressures might yet be subdued. However, amidst the whispers of a potential rate cut, the murmurs of dissent linger. The road ahead remains shrouded in uncertainty. What lies beyond the horizon for monetary policy? Will the winds of change usher in an era of economic stability, or are we merely standing on the precipice of a tempest yet to come? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. As the economy tiptoes along the edge of uncertainty, the latest consumer inflation report has reignited the perennial debate surrounding monetary policy. With the winds of disinflation whispering promises of respite, eyes turn expectantly towards the Federal Reserve. Will they heed the call for a September rate cut, or will they remain steadfast in their resolve to weather the storm? The answer lies buried within the labyrinth of economic data, where each fluctuation in the consumer price index sends ripples of speculation through the financial markets. Macquarie, with unwavering conviction. Despite the allure of a September rate cut, they stand firm, projecting no such action until the distant shores of 2025. Theirs is a voice of dissent in a cacophony of hopeful whispers, rooted in a steadfast belief in the resilience of the economy. Yet, the tide may be turning, as evidenced by the latest consumer inflation figures. April saw the pace of consumer price index growth slowing to a modest 0.3%, a figure that fell short of economists' expectations. This deceleration, fueled by a sluggishness in services pricing, paints a picture of an economy caught in the throes of transition. The rent and owner's equivalent recent OER component, along with services excluding housing, both witnessed a notable slowdown, sending ripples of cautious optimism through the financial markets. But amidst the flicker of hope, dissenting voices remain. The so-called supercore inflation, a measure that excludes housing and aims to provide a clearer picture of underlying inflationary pressures, continues to linger stubbornly. For the Federal Reserve, tasked with the delicate balancing act of taming inflation while fostering economic growth, these nuances hold profound significance. The Federal Reserve's response to the current economic landscape hinges not only on the consumer inflation report, but also on a myriad of other factors. The Producer Price Index, PPI figures, released just a day earlier, paint a contrasting picture, one where price pressures stubbornly refuse to abate. The juxtaposition of these divergent trends complicates the Fed's decision-making process, leaving policymakers grappling with a conundrum of conflicting data. Macquarie's forecast, when viewed through the prism of the broader economic landscape, appears rooted in a cautious optimism tempered by pragmatism. While April's consumer inflation figures may offer a momentary respite, the underlying data, when combined with insights gleaned from the PPI, paints a more nuanced picture. Sticky price pressures persist, casting a shadow of uncertainty over the path ahead. As the Federal Reserve navigates these choppy waters, eyes turn towards the upcoming employment report, slated to provide further insights into the health of the economy. For Chair Powell and his fellow policymakers, the data gleaned from this report may offer much-needed clarity, providing reassurance in an era fraught with uncertainty. Yet, Amidst the labyrinth of economic data and the cacophony of competing voices, one question remains unanswered. What lies beyond the horizon for monetary policy? Will the Federal Reserve heed the call for a September rate cut, or will they remain steadfast in their conviction, charting a course towards economic stability? The answer, shrouded in uncertainty, lies at the intersection of data and intuition, where policymakers must navigate the tumultuous seas of economic uncertainty with unwavering resolve. Amidst the ebb and flow of economic data, how do you perceive the path forward for monetary policy? Do you believe a September rate cut is warranted, or do you align with those who advocate for patience and prudence in the face of uncertainty? Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.